You're with us here on Know Your Company and it's earnings season. Today we're speaking with Vijay Chandok of ICICI Securities, a fantastic quarter, 12.5 rupee dividend. Vijay, what's working for you? What are the major growth drivers? Are we seeing it broad-based across verticals? Are certain segments driving growth? Take us through the numbers this time.
Well, good morning, and thank you very much for having me on your show. When you look at our overall performance, indeed, on a YOY basis, the growth has been, quite strong. 33% growth on revenue, 29% growth on profits. Dissect it, and you'll find that the growth has been across. We've been focused very strongly on diversification as a theme, which is playing out. You can see diversification on many parameters clearly visible, whether it is client mix, whether it is channel mix, whether it is revenue mix, and even within revenue, there is a lot of texturization of revenue that we have been able to deliver. So diversification as a theme has played out quite strongly. The second area that has played out is the fact that we have invested a lot in digitization and introducing digital properties and digital tools for our customers. Many of these digital tools are young in the market. This year, they have started scaling up. I think we could see traction emerging out of them. For example, we launched something called our Markets app, which along with that, for mutual funds, we launched Money app. Markets app focused on cash, equity, F&O, currency, commodities. And Money app focused on mutual fund and other financial products. So both these apps together have crossed 1 million downloads. Markets app has got a rating of 4-star on the Play Store. Similar rating is there even for the Money app. How has that helped us? Clearly, I would say to some extent you could attribute the gains that we've seen in market share on equity side. If you look at our cash equities business, there's a gain in market share by 30 basis points. We'll attribute it to these kind of launches. Along with these launches, we've launched a bunch of properties like one-click baskets, premium portfolios, which are curated baskets brought back by research and partnerships that we've done with various investors in the market. I think that whole cohort together has all helped our market share improve from 9.8 to 10.1% on cash equity side. Similarly, the launch of these digital properties and the concurrent I would say ecosystem we've created around these properties has helped us improve market share on mutual fund up by 10 basis points. Systematic investment plans, which is a very sticky product. Actually, now we are touching about 1 million SIPs per month on an executed basis. And there also now we have become the 4th largest player in the country. We are larger than most of the banks in the SIP that we garner. So yes, I think some of these are important. They have shown traction. What is something that we are still invested on is on the F&O side. I think that's an area that we want to really harness the larger opportunity. That's a growing market, and we believe clearly that we had historically underinvested in this space. We have spent a lot of time investing on some of the other areas that I just described. This is probably lagged in terms of investments and also in terms of timing. And that is, I would call it WIP. And we hope that once that is all in place, which should start happening during the course of this year, the benefits of those investments should also additionally improve.
On the QIP, take us through a little bit more on that. Next steps, what you're anticipating and what really you're using those funds for.
So this year is, going to be. So let me start by talking about our medium-term vision. Our medium-term vision is focused on what we describe ourselves as a Neo Financial Supermall, digitally powered, open architecture, which means that investors, customers could get any kind of financial products, be it in the domain of investment, savings, wealth management, be it in the domain of protection, insurance, be it in the domain of borrowing. All and from any player that exists in the country. The idea is to make it open architecture, widely available. That's a medium-term story. What it means is, it means that we need to digitize a lot of stuff that is happening either physically, digitally, into our property. So that's the transformation that we sort of set out for ourselves. We've done a good amount of work in many of the spots that require to be digitized. And there is work in process happening still on many areas. So technology is a big area of investment this year. We have looking to up the sort of spends on technology. We expect, and where are we doing? We are doing this in digital properties, more investments there. Even in the back end, we are actually making our entire data center go into cloud. And that will help us get more agility and speed. The second area that we are investing in is in marketing and brand building. I think that's an area that we have not spent too much in the past. We could see some signs of that happening in the Q4 itself. But this year we will continue with investments in brand. I think these two are areas that specifically will get a little more attention than what we've seen in the past. But otherwise, all the various things that we've set out to get to our vision, digitization, showing operating leverage, showing growth, I think those are par for the course.
Vijay, what's your sense of the markets? From what you're saying, you're sounding very optimistic on growth and are seeing, of course, tremendous interest in people coming online to trade. But given the context of inflation, rising prices, rate hikes, all in the background, are you convinced that we'll continue to see this momentum over the next couple of quarters?
So when you look at the fiscal year that has just started, I think it would be fair to say that we are entering that fiscal year with headwinds. These headwinds are coming from two forces. I think clearly the action that have happened through Fed and the consequent expectations of rate hikes that are more or less now certain that would play out during the course of this year. The high inflation that is running in global markets, as well as now cropping up in India, and there's also this issue which is in the domain of commodity prices going up, which are clearly fallout of, to some extent, what's happening in the Russia-Ukraine zone. All of these are definitely going to have some kind of a headwind impact on markets, and that's what is probably playing out already. It has surely created uncertainty on the IPO side. For instance, you would have seen market issuances, fresh market issuances clearly slowed down in Q4 itself. And it perhaps would continue in the early part of this year. So clearly, I think when you look at it from the here and now or the immediate future perspective, there are clear headwinds and there are uncertainties around all these domains and areas that you said. My optimism stems from the fact that as a head of a company, I'm investing for the future. The future is looking very constructive to me because we are going to see more participation in the markets in the medium term, more money flow into the markets in the medium term. And to harness that opportunity, there is a need for investment. And that's why, that investment I mentioned will continue from our side. Yes, there are going to be headwinds along the way in the short term, but I don't think that is going to dislodge the medium term story. To your point, whether there will be a meltdown, I really, we've seen volatility for sure. I don't know how you describe a meltdown, but volatility is going to remain. And we've seen, motion of the indexes from 18,000 plus to 15,750 and then bounce back and again retreat. So yes, I think clear volatility is there. Our house view is perhaps, that's the range it would operate at least in the immediate future. So fraught with volatility, but meltdown beyond what probably I just mentioned looks a little, unlikely at this point in time.
What about the wealth side? I just wanted to get a note from you on that. Are you seeing investors fully invested, looking to perhaps sit on some cash? What's the mood like and are flows intact?
So the way we define wealth is any individual having more than 1 crore of assets with us. Today, we have close to 68,000 plus such investors. And the total value of that AUM for us is around 2.8 lakh crore sitting with us. How has this behaved? I think slightly longer term trend, it has shown spectacular growth. We've seen more than 100% growth. On a YOY basis, it's been a strong growth. But when you look at on sequential basis, it's been a very flattish kind of a trend. So I think in a way that reflects the sentiment and the mood. I think they are in some sense on a risk-off mode. They are very cautious right now. I suppose it is more about wait and watch, rebalancing portfolios. It's about shifting a bit to some of the safer areas, fixed income, etc., which is going on. Clearly, I think rebalancing as a theme is something that HNI investors are focused on this now. Too much money, I think, is not coming in a rush. We did see phases when markets declined and money rushed in. I don't see that happening with that ferocity and velocity that we've seen in the past. So clearly, market is waiting and watching a little.
All right, Vijay, thanks so much for joining us and taking us through the numbers this time around. A great set of earnings for ICICI Securities, and we look forward to more details on that QIP.
If you like the video, do like, comment, share and subscribe.